Welcome to today's market report. European stock markets are seeing opening higher on Tuesday as investors welcome the end to a continuous US presidential election campaign and hope for an end to political uncertainty. DAX futures traded 0.5% higher, of CAC 40 climbed 0.8%, FTSE 100 rose 0.7%. Polls open Tuesday, although nearly 100 million voters have already cast their ballots to decide whether President Donald Trump or Democrat Joe Biden will occupy the White House for the next 4 years. The latest surveys suggest Biden has a substantial lead nationally, but the polling in several of the key swing states looks a lot closer. Assuming the opinion polls are correct and Joe Biden wins a convincing victory with the Democrats retaining the House of Representatives and gaining control of the Senate, this is likely to be the scenario that delivers the swiftest, most aggressive fiscal stimulus. However, the picture may not be this clear as a winner may not be declared for several days, owing to mail-in vote counting, and that declaration might still be contested in court. Meanwhile, Italy became the latest European country to introduce tougher containment measures to take on the spread of the COVID-19 crisis, including curbs in travel between the worst-hit regions and a nighttime curfew. European leaders are desperately trying to halt the surge in the virus before the Christmas holiday season. The UK, France and Germany, among others, have introduced partial shutdowns in the last few days. Aside from the US political developments, investors are braced for an eventful week with central bank meetings by the Federal Reserve and Bank of England, as well as the release of US jobs data for October. In corporate news, BNP Paribas SA is likely to be in focus after the French bank's debt and equity trading beat estimates, while also posting lower than expected bad loan provisions. Oil prices edged lower on Tuesday despite talk that Russia could hold back on increasing product in the new year. The market is struggling with more lockdowns in Europe in the wake of mounting coronavirus cases and rising supply from Libya. Crude futures traded 0.2% lower at $36.75 per barrel. Brent contract fell 0.4% to $38.82 per barrel. Gold futures rose 0.1% to $1,893.45 per ounce. On the FX front, GBP USD eyes a firm break above 129.33 for bulls to take over. Broad-based US dollar weakness amid the upbeat market mood continues to underpin the cable as markets stay focused on the US election while putting aside the Brexit and the UK lockdown worries. From a near-term technical perspective, the path of least resistance appears to the upside, as the price is teasing a falling wedge pattern on the hourly sticks. An hour closing above the falling trendline resistance of 129.33 is needed to extend the recovery momentum. The pair is consolidating the recovery from near monthly lows of 128.55. The relative strength index inches higher, currently at 54.55, allowing more for the upside. Bullish confirmation could fuel a run towards the bearish 100-hourly moving average at 129.48, above which the 200 HMA at 130.03 could likely come into play. Alternatively, a break below immediate support at 129.25 or 129.18, which is the line in the sand for the bulls. Acceptance below the latter could record a multi-week lows around mid-128s. With the second national lockdown hitting the already fragile British economy, global markets anticipate the BOE's action during the Super Thursday. Among them, Morgan Stanley eyes $100 billion buy-in, While justifying the need, Jacob Neil from their team said with a national lockdown in place for at least a month and a far bigger hit to the economy compared to that stemming from the three-tier restrictions system in place in England until this Thursday, we think that MPC will have to act more aggressively than we previously thought. On the other hand, Brexit Party leader Nigel Farage is up and loud against the latest national activity restrictions and is poised to challenge the move in the House. Eurodollar leaves behind the recent pessimism and retakes 116.70 after bottoming out in the vicinity of the 116 level. The pair posts decent gains in the wake of the opening bell in Euroland on Tuesday and reversing at the same time 5 consecutive daily pullbacks. Amidst rising cautiousness ahead of the US presidential elections, the dollar index was down 0.2% at 93.915. Dollar yen was at 104.56. This is today's market news. Thanks for listening. We'll see you next time.